Got like 15 minutes. Might as well go live in the train station since that's what we do. I have nothing to talk about besides the fact that we're doing the options trading workshop tomorrow. So for those who have seen, I have this premise, and it's you invest through options. A lot of times people want to use options to replace a stock that they wouldn't buy. I think that that's the wrong thing to do. The benefit of options is you get to amplify your buying power. So say, for example, if you want to buy 100 shares of Google, most people don't have 100 times. I think they're selling it like $1,800. And so options allow you to buy 100 shares of Google, which then, let's say Google reports earnings and they go up $100 per share, which to them is only 5%. That 5% gain, $100 per share times 100 shares you own, that's $1,000. That's like $10,000 in profit. So options are good in that regard. But I always tell people, like, you want to invest through options, meaning only buy options in a stock that you would buy. Don't buy options to gamble, to speculate, to say, oh, it's only $200, it's only $300, it's only $400. You want to be in position to, it just creates for a better investing experience. It's kind of like, I don't know a good example, but I would just say that you have the best experience. Say, for example, you've been following Apple. When you're trading options into earnings, it's important to not just know the news, not just know the trend that it's on, but it's also important to know how that stock performs. So it's important to know the 52-week high, 52-week low. It's important to know pretty much all the news that's around that company, because one of the worst things that can happen is buying an option and it beating earnings and you still lose money. It's important to do your research. You got to know these companies like the back of your hand. We're not gambling here, we're investing here. So you got to really know the company. You got to know the news. You got to know how it's performed in the past. You got to know the CEO. You got to know all that stuff, because that's going to determine where it's going to go. It's going to determine how low it'll go. That's going to determine how moving averages are very important. Sometimes people like to use a 20-day moving average, a 100-day moving average, and that kind of helps you track the trend as well. Moving averages are important because it helps you determine if it's trading below that moving average, because we have this thing called regression to the mean. So regression to the mean basically says, like, if it's too high, it's likely going to go down towards that moving average. If it's too low, below the moving average, it's going to likely go up towards the moving average. So that's a very good point. Moving averages are very helpful. I'm talking stocks and options right now. Can you explain? That's a good thing. Okay, so in and out of the money. All right, so you have puts and you have calls. And so let's say, for example, all options are kind of predicated based on their strike price. And so let's say that your strike price is $50, meaning that the option can be exercised at $50. If you have a put at 50, what's going to happen is you're going to want that price to go down. You want it to be lower than 50. And so then, let's say, for example, the stock price, the actual stock price on the market, not the option strike price, is 45. That means you'd be in the money $5, meaning that the option is worth exercising because now it's profitable. The same is true on the flip side. So if you have a call option at 50, then it's in the money if it's above 50, if it's priced at 55, because you put down and you call up. Putting is a way to short a stock. Call is a way to go long a stock. So hopefully that answers your question. What else is there to talk about? Now, we have a lot of stuff going. We got the barbershop going. We have the rental properties going, looking to get into commercial space right now. Acquiring as many assets as humanly possible. Oh man, I gotta keep my coat from bunching up. It doesn't look very fly when the coat's bunched up. So that's all I gotta say about that. Options are lucrative, but it's important to, because I've fallen into this trap before too, where you see a stock that's gonna report in earnings, and so you'll say, hey, I can buy it now, and let's say it goes up 10%, 20%. and then I'll buy it, and I don't know anything about the company. All I know is the reporting earnings. At that point, I'm gambling. I'm not investing. Whereas Tesla was a stock that was trading at $200 at its low, and now it's trading at $350. I know Tesla. I have a lot of faith in Tesla. I see their products on the road. I've done the research. I know their trading range, and I knew that $200 per share was undervalued. Anybody who bought Tesla at $200 per share is up 75% now, because now it's trading at $350. So this question says, what do you think about the liability of a chauffeur business? I never thought about that, but I think that, and I was thinking about this today, is you get to choose your problems in life. And I would rather have business owner problems, not employee problems. So whatever problems that come from starting your chauffeur business, that is also the offset of the money that you're gonna make running your chauffeur business. And so I would encourage you to not allow the liability to dissuade you from going into that opportunity, but instead learn how to hedge the liability. Maybe there's insurance that you can purchase. Maybe there are different strategies and tactics you can employ to protect against that downside and that liability. I think that is a more intelligent way of approaching the opportunity, as opposed to saying I can't do it because of the problems that are associated with it. Because there's problems associated with everything that you're going to do. Let's say, for example, you want to, thanks for the hearts, by the way. Let's say, for example, you want to get into real estate. We have a lot of problems in real estate. It's not all roses as though they portray it on the internet. It's a lot of issues. You got taxes, you have insurance, you have complaints. You have all that stuff. And so, what was I going to say? I forgot what I was going to say. Yeah, so I would just say that, like, as a business owner, it's important to protect against the downside, not to avoid it because there is a downside. Being an employee has downsides. Being all these different things has risks associated with it. So I think you should definitely pursue it. It's a great idea. A chauffeur business, there's opportunity there. Anything that you can turn into a business is lucrative versus a job. And so what does that look like? That looks like you're employing chauffeurs at that point in time. That looks like you might be investing in buying the black cars so they can drive them. You got to figure out how to be creative. Wealth comes through creation, not through competition. There was a time when people thought that if you had a taxi medallion, you were just set for life. You're rich, you're wealthy. And there are people out there in New York who had these taxi medallions. And then Uber came along and put them out to business. A lot of times where we struggle is we let what's, quote, allowed prevent us from what's possible. Meaning there will be laws that will say, oh, you can't do this because of this. Well, maybe that law is stupid. Maybe that law needs to be changed. Well, don't let that law, as long as you're looking out for people's best interests, prevent you from innovating, from creating, from doing something. Airbnb, people are saying, oh, I can't rent out my apartment because the landlord says I can't do it. Or I can't do this because there's regulations against it. Well, you're preventing your wealth by not being creative. You got to figure out the creative way to get to your goal. So, yeah, I think it's a great idea. What else is there to talk about? I don't know. I wish there were some questions in here. Questions are good. All right, cool. It says, I understand that the leverage is times 100 on the options. So in order to weigh out your expected ROI, would you just multiply or divide the initial investment cost? So it's not, each option is valued differently. And you have to kind of look at what the price is by going to the options marketplace, just like every stock is valued differently. Leverage times 100, I think, is kind of misleading. That statement is, each contract is 100 shares, right? But if you go into the option marketplace and you see that one contract, or you see that there's a price of $7, then it's going to be 7 times 100. So you're actually paying $700. So then that $700 gives you access to 100 shares of that company. So say, for example, that company was NVIDIA. Now, NVIDIA is selling at $200 per share. If you were to buy 100 shares of NVIDIA, you would be paying 20 grand. $2,000, 100 shares, be 4 zeros. You're paying $20,000. That's what you're paying. $20,000 to get 100 shares of NVIDIA priced at $200. And then, let's say, for example, NVIDIA goes up $10 per share. Now, if you have an option, that's $10 times 100, which is $1,000 in profit. If you had 100 shares of NVIDIA, that 10% is going to give you that $1,000. I don't know if that's right. Is that right? No, it's not right, because 10% isn't $10. 10% is $20. So $20 times your 100 shares is $2,000 in profit. Nevertheless, $2,000 in profit on a $700 investment. I think my math's off. I'm like trying to do this in my head, but anyway, I don't think that your question is accurate. Would you just multiply or divide the initial investment cost? So, yeah, I think that in order to figure out your ROI, what you would do is you'd say, okay, you have a $700 investment, you make $2,000 back. 7 into that is whatever that is. It's close to 300%, or maybe 200%, one of the two. So that's how we'd find it out. Same way you'd find the ROI in anything else. There's a lot of people in here, man. I gotta perform. I gotta actually add value to the community. Thanks for following the Todd Capital brand. We're doing some great stuff. By the way, we got the security guard in the video. That's her right there. Yeah, when options win, they win, fam. But that's why I tell people, you don't want to get into the habit of gambling with options. We want to get into the habit of investing with options. Why? It's important because, let's say, for example, I love the company Tesla, or I love the company Habit, or I love the company Under Armour, I love the company whatever. The way I got into trading options is by successfully trading the stock long. And I found that I was getting very, very good at predicting companies that I love and putting all my weight. I'll put thousands behind these stocks going into earnings. And I realized, hey, I'm kind of good at predicting this, but I'm also kind of risking all my cash. But I'm also limiting my upside. So you put 15 grand behind one stock and it goes up 10%, you make $1,500. I can make that same $1,500 or more without putting up $15,000. And so then what I started doing is saying, okay, well, I'll put $2,000 behind this option. And so I put $2,000 behind Ulta one night and ended up making $5 grand off that trade. $2,000, made $5 grand, kept my money. And so that's kind of how I got into it. But I've also lost some money in options. When I started kind of gambling and speculating with options, that's when I lost money. And so there's instances where I would try to do the same thing, put $2,000 behind something, and boom. And Microsoft, I never forget, I lost money in Microsoft once. I went long Microsoft, and I think that was I had one trade, I think it was Bank of America. It was probably the worst trade ever. I lost $3,000 in one day. I was depressed. But I had made so much money that year that it didn't really matter, because once you get on a hot streak and once you kind of invest through options, then you can make some good money. But if you're out here speculating through options, then you can't. The coolest thing about having a background in finance is we can do it all. So it's not just real estate. I always tell people we're not necessarily real estate guys as much as we're investors and finance guys, which then allows us to make money in stocks, make money in a barbershop, make money in all these different things. The question is, how much should a beginner put in the I don't care pot to invest in options? And can I mentor you? Well, I'm actually hosting a class tomorrow. I've heard of Forex. I haven't really gotten into Forex though, but I've heard of Forex. I would like to learn a little bit more about Forex, so I've heard good things about it. She said, how much should a beginner put in options in the I don't care pot? I think that answer depends. It depends on what your financial situation looks like, because your finances could look a lot different than the next person. You might be able to afford to lose, more than the other person. I think that one of the best ways to learn how to trade options is to trade the stock. It's a little bit more secure. Because one of the things that people don't tell you, one of the things people don't know about options is it's, in a lot of ways, it's you either make a bunch or you lose it all. So it's not like with stocks where you lose 10%, you still have 90% of your money. And options, you either make an astronomical return or it goes to zero. So you have to be willing to invest with money that you're willing to lose. And that number might be different for other people. It might be 500 for you, 1,000 for you, 10,000 for you. Who knows? For me, I think I started off smaller, maybe investing, because contracts can be pretty inexpensive. You can find some for $1, $2, and so you can be in a contract for a position for like $200, $300. But you got to be willing to lose that $200 or $300. So, in regards to mentorship, I would say check out the class, because all my classes come with mentorship and coaching. So that's just an FYI. If you ever see anything that I post, whether it's an LLC, whether it's anything, LLC, course on long distance real estate investing, course on this, course on that, it all comes with mentorship and coaching. So I carry people along the way. The goal is not to, the goal is for you to win with the strategies, not just to learn the strategies. So, but yeah, Forex is something I haven't really gotten into yet. What's your take on the stock market, given that in real estate you can use 4 times leverage? I think the leverage is good depending on the value of the investment and the strategy. One of the things about the stock market that I tell people is the stock market allows people with...
May I have your attention, please? This will be the first boarding call for northbound on track train number 785. Train 785 is now boarding on track number 12 for Goleta. On track train 785 will also make stops in Glendale, Burbank Airport, Van Nuys, Chatford, Simi Valley, Camarillo, Oxnard, Ventura, Trapiceria.
It's going and going. All right, cool.
Santa Barbara, final destination, Goleta. All passengers holding tickets for this train, please make your way to track number 12 at this time.
All right, so my take on, I don't think you could compare stocks and real estate. It shouldn't be either or. A lot of people like to say, oh, real estate's better than stocks. Oh, options are better than this. Like I told you guys, I'm not a real estate guy or a stock guy or option guy. I'm an all things guy. So the answer is, just because we talking stocks doesn't mean we ain't invested in real estate, because we are. Just because we invest in real estate doesn't mean we don't invest in stocks, and vice versa. One of the coolest things I think you can do is put your money to work and diversify. But one of the coolest things is when you can start investing your rental income. And so you start putting your rental income and using that as capital to invest in the stock market or invest in options or to buy a barbershop. That's what owners do. They use their assets to fund their other investments. So my take on the stock market and real estate that you can use 4 times leverage is okay. My answer is just okay. I don't think it's either or. A lot of people like to make that comment to say, oh, I would never invest in the stock market. Like, okay, it's good for you. But my point is that, like, the stock market allows people, especially when you're trading options, to take that 1,000, that 2,000 that you're making in your side business and turn it into 10,000, turn it into 15,000, turn it into 20,000, and then you take that money and you invest in real estate. Then you take your real estate profits and you put it back into the stock market. Then you take your stock market profits, blow them up in the stock market, and you invested in more real estate. It's this cycle of wealth building. What do you do when you have several potential profitable business ideas with written plans and are trying to increase your profit, but you have a full-time, low-paying job and a landscaping company? That is a lot to digest. I would say that ideally your products and your businesses are symbiotic. One of the things that allows us to work is all of our products and all of our businesses complement each other. So I think that's really important. But if you're trying to have your hand in 10 different pots, I think that you're doing the wrong thing and you're likely not going to succeed at either of them. So I'd recommend picking one and going all in on that one. And then what you're going to find is, as that business becomes more successful, other opportunities are going to flow from that business. But while you're working the opportunities that flow from that business, you're still promoting the main business because it's symbiotic. They work off of each other. So I would tell you, maybe work on the landscape company in your business to blow up that landscaping company, or run those two and then pick one and then blow up that one and then kind of branch off into those other opportunities there. But trying to chase 10 balls is not a good business strategy. I would not recommend it, and neither would Andre C. Hatchett, who would not recommend you chase 10 balls. Yeah, so that's all I gotta say. I should do this more often. The books that I'm reading right now, I'm reading the Gucci Mane book. The Gucci Mane book. It's pretty good so far. I found some real estate gems in the Gucci Mane book so far. What else? What else am I reading? Reading the book Black Fortunes. And then I'm also reading, I got a third one. Oh, the Kiyosaki book, Fake. I'll let you guys know how they are. Am I familiar with wholesaling real estate? Yes, I am. However, I don't actually do it. I need to get into it. I always tell people that wholesaling real estate is it's sound real estate investing. It's like the fundamentals of real estate investing. One of the silliest things you can do is only source your deals through wholesalers or realtors, because then you limit your exit strategy. When you get your deals only from wholesalers, the only option you have is to pay cash and close fast. That's the wholesaler strategy. They're saying we only sell to cash buyers. But if you go directly to the actual seller, you never know what you can get out of there. You can seller finance it. You can hold it and wholesale it yourself. You can JV with them, rehab it, and sell it. The doors open up to you when you control the deal, and you control the deal by going directly to the seller. So for me, I'm looking to wholesale locally, but I'm not looking to wholesale. I'm looking to just acquire intelligently. So I use my Deal Machine app to kind of surf the downtown LA properties, because the goal is to do a local development in downtown LA, which will then allow me to live in downtown LA, because I'll build my unit into the building and into the profit structure. But yeah, wholesaling it's people are making good money wholesaling, man. It's crazy right now. It's nuts. The class is tomorrow, Friday, at like 7 o'clock p.m., maybe 8, I don't know. But it's going down. I will record the class, and we're going to talk about kind of the fundamentals of option investing. We're going to talk about different strategies, how to analyze a trade. We're going to talk about all that cool stuff. And also we have the LLC formation. We also have all these. We have a lot of cool stuff in the link tree. The trade and travel course is there. Andre's notary course is there. It's like a mall of business and entrepreneurship. Sorry, letting them read this stuff off.
And final destination, Galita. All passengers holding tickets to this train, please make your way to track number 12 at this time. This is the final boarding call.
The class tomorrow is $200. You can find it at the Gumroad account, which is www.gumroad.com/capital. This question says, with the LLC offering, what does the mentorship entail? It entails whatever you want it to entail. So that could be pre-filing advisement, and it could be making sure that you're filing it correctly. It could be all that.
Thank you, please. This is the first boarding call for southbound Amtrak train.
I'm gonna get you guys. He just keeps talking about my stuff. What's going on, Shanita, with TT Esquire?
Southbound Amtrak train number 590 will make stops in Fullerton.
This question says, if I have a group of 30 people, can everyone be listed as a member in the LLC? The answer is 100% yes. The way you do that is through your operating agreement. And so the operating agreement is where you list all your members. And you're going to have to determine if you want it to be member managed or manager managed. With that many people, I would highly recommend to be manager managed. The cool thing about a manager managed LLC is the managers of your manager managed LLC can actually be another LLC. So that other LLC or entity, whatever you want it to be. It could be an LP, it could be a partnership, it could be an S Corp, it could be a C Corp, it could be an individual, it could be a group of individuals. But the cool thing about that is, you can do whatever you want to do, because it all comes down to the contract. It all comes down to the operating agreement. And the operating agreement determines the terms of your LLC. The operating agreement is the constitution for your LLC, or in corporate law, it is the bylaws. What's going on, Dr. Mike? The answer to this question, do you have a podcast, is I have 2 podcasts, one of which I'm recording tonight and dropping tomorrow. One's called Blackwell Tweet Talks, the other is called The Millionaire Podcast. And we just dropped an episode with Nicole Purby, and it was lit. And going live is kind of fun. This is kind of fun. Man, I'm in the train station. It's kind of fly in here, huh? I should take a screenshot of myself, looking all fly and stuff. Fly. Hopefully I can upload this to YouTube. That's the best. Yeah, man. It's called Tweet Talks. Yeah, Jamaica 10. All right, cool. We got a question. The question is, I should instant snap this. The question is, how does somebody become a guest on the podcast? The answer is, it depends on which one, and you just send a DM. You slide in the DMs. We do so much business in the DMs that's how you do it. You slide in the DMs, and you say, hey, let's get on the podcast. And we record on Sunday mornings between 8 a.m. Pacific and 10 a.m. Pacific. So we usually have 2 slots available. So it's kind of cool. I like that. Yeah, we need you on, because I don't think we've covered your topic, so we can definitely talk about that. I wonder if I can slide it away now. Cool. I'm going to start bringing guests on when I go live. That's one of my goals, is to just set up a live with somebody, because you get a lot of content and a lot of value out of the Instagram lives. So we got a 10x. 10x, that means we got to hit all places. That means I got to be on YouTube, Instagram, Snapchat, Twitter, all the places, all the opportunities to be heard. I got to get to this train. It's 7:17. I got to get a good seat so I can listen to the Gucci Mane book. So thank you all for coming on. Hopefully next time we do this, you guys have more questions, because the questions drive the conversation. Be great.